Welcome back, traders. Thanks for joining me here today. The strength of divergence across multiple indicators is a technical trading indicator that helps to detect possible divergent systems on the price chart with the divergent strength value. This technical trading indicator is made up of multiple trading indicators that are combined all together to be one, and they are the RSI, OBV, MACD, stochastic, CCI, MFI, and the AO indicator. Altogether, they are 7 in number. This is a good technical trading indicator that can help detect tops and bottoms in the market. Also, it's a good technical indicator to spot possible reversal points in the market. To apply this technical indicator on the trading chart, search the keywords "the strength of divergence across multiple indicators" on the indicator search box. Proceed further to select the strength of divergence across multiple indicators EP version by Reese. Before I proceed further to show you how to apply this technical trading indicator to execute buy and sell trade setups in the market, I need to explain some of the parameter settings for this trading indicator. Left-click on the indicator and select the Settings option to see its parameter details. Under the Input settings, there are the divergence parameters, which consist of the bullish, bearish, and hidden divergence signals. There's also an option to exclude if broken trendline. If this is set, divergence is not considered valid if an intermediate pivot high-low breaks the divergence trendline on a linear scale. By default, the previous pivot bars before or after is 4. Pivot lengths specify the number of bars before and after each pivot high or low to consider it a valid candidate for divergence. The next divergent pivot bars before is also 4 by default, and the next divergent pivot bars after is 2 by default. There are the look-back bar by default is 50. The look-back pivots by default are 2. Look-back bars and look-back pivots specify the number of bars or the number of pivots to look back across. All components of the calculation are weighted and can be modified on the Inputs page in Settings. Weights are simply multipliers. Regular divergence weight by default is 1. Hidden divergence weight by default is 1. Price weight by default is 0.5. This is multiplied by the price component. Price sources specify separate price sources for bullish and bearish divergence. Indicator weight by default is 1.5. This multiplied by the indicator component. And other settings which make up the strength of divergence across multiple indicators. Under the Indicators section, there's the RSI weight by default is 1.1. OBV weight by default is 0.8. MACD weight by default is 0.9. Stochastic weight by default is 0.9. CCI, MFI, and AO weight by default are all set to 1. Display settings specify how lines and labels should display, including which divergence strength values should show the largest labels. Exclude specific divergence types and indicators. How does strength of divergence across multiple indicators work? The total divergence strength value is the sum of the divergence strengths of all indicators for which divergence was detected at a given bar. Each indicator's individual divergence strength is comprised of 2 basic components. The first component is price, the magnitude of change in price over the divergence period pivot to pivot. The second component is indicator, the magnitude of the change in indicator value over the divergence period. Because different indicators' scales and volatility can vary greatly, the values are expressed in terms of standard deviation to ensure that the values are meaningful and equitable across all indicators and assets, instruments, currency pairs, etc. For a better quick understanding, let me show you how this works on the trading chart. Also, for a high winning rate result, make sure you apply this indicator to trade in a trending market. As a newbie using this trading indicator, first learn its application for the continuation of trends before applying it for the reversal of trends in the market. To apply the strength of divergence across multiple indicators for the continuation of a bullish trend, first, watch out for a strong bullish trend. Step 2. Watch out for the price to make the first bearish swing low. Step 3. Patiently wait for the price to make another second bearish lower swing. Once these 3 steps have been achieved, the next step is to closely monitor the reaction of the strength of divergence across multiple indicators in relation to the 2 low swings on the price chart. Once the strength of divergence across multiple indicators plots a green bullish divergence line underneath the double low swings, the last step is to watch out for a strong close of a bullish candlestick to confirm that the second swing low is a potential bullish move. Proceed to buy the close of the bullish candlestick in anticipation of the continuation of the bullish trend. To apply the strength of divergence across multiple indicators for the continuation of a bearish trend, first, watch out for a strong bearish trend. Step 2. Watch out for the price to make the first bullish swing high. Step 3. Patiently wait for the price to make another second bullish higher swing. Once these 3 steps have been achieved, the next step is to closely monitor the reaction of the strength of divergence across multiple indicators in relation to the 2 high swings on the price chart. Once the strength of divergence across multiple indicators plots a red bearish divergence line above the double high swings, the last step is to watch out for a strong close of a bearish candlestick to confirm that the second swing high is a potential bearish move. Proceed to sell the close of the bearish candlestick in anticipation of the continuation of a bearish trend. To apply it for the reversal of bullish trends, make sure the bearish divergence appears at a powerful resistance level on the price chart. Likewise, for the reversal of bearish trends, make sure the bullish divergence appears at a powerful support level on the price chart.